In this video, I'm going to be talking about bookkeeping fundamentals, bookkeeping concepts, bookkeeping 101. This is going to be hardcore bookkeeping stuff. So if you are an accountant, bookkeeper, or an aspiring bookkeeper, this is going to be perfect for you. And I hope you are able to learn something. I'm going to be talking specifically about journal entries, and I'm specifically going to show you how debits and credits work and how they relate to accounting and bookkeeping and financial reports. So this is going to be all about debits and credits, and I'm going to show you how to do journal entries. If you can hear me, if you can see me, let me know in the chat. I would love to hear and see who all is watching, and let me know if you can hear me. Let me know if I sound okay. I want to make sure my microphone is connected. So my name is Zach Pasquarello. If we haven't had a chance to meet yet, I started my bookkeeping business 5 years ago. And now I make these videos because I honestly just love teaching people how to start a bookkeeping business. A lot of the stuff I talk about is fun and exciting. Sales and marketing, that's fun and exciting. But bookkeeping fundamentals, bookkeeping concepts, not so fun, but super, super important. So from what I've learned, starting a bookkeeping business is a 3-step process. First, you have to learn bookkeeping and QuickBooks. And so that's what we're going to talk about this morning. And then you have to learn marketing and sales. You have to get clients. And then finally, number 3, you have to deliver high quality customer service. So this first step, bookkeeping, and I'm also going to show you, I'm going to share my screen and I'm going to talk through QuickBooks Online. So we're kind of going to accomplish 2 things at one time. I'm going to go over bookkeeping fundamentals and I'm going to go over QuickBooks Online. So I'm going to share my screen. I have QuickBooks Online up here on my screen. I'm going to go over debits and credits. I'm going to go over journal entries. So let me know in the chat. Let me know what journal entries you want me to go over, and let's just go ahead and get started. So my QuickBooks screen, for some reason, has been going in and out. So if you see an error message, I do apologize, but I'm going to go through this for about 10 or 15 minutes, or as long as you guys ask questions about debits and credits. And then after that, I'll open up the floor and we could talk about anything. So this keeps on happening. What happens to your QuickBooks page? I'm not sure why that's happening, but this is the sample company in QuickBooks Online. So if you don't know, you can get a QuickBooks Online accountant account, and you can basically use the sample company to practice doing bookkeeping in QuickBooks. So that's what we're going to do right now. So I'm going to pull up a journal entry here. So if you're on your home page in QuickBooks, you can click on the top left-hand corner and click plus new, and you can do a journal entry. So this is not necessarily how we do bookkeeping all the time in QuickBooks. Typically, you're going to record expenses and bank deposits and sales receipts in the bank feed of QuickBooks, but I'm going to show you how debits and credits work in accounting. So I'm going to do journal entries. So we're going to start from the top. Really, really simple. Let's just imagine that you have an expense. So you take your debit card and you purchase supplies. So we're just going to keep it super simple. Let's just say $50. So if we credit the checking account for $50 and debit the supplies account for $50, this will create a transaction on the profit and loss. This is going to create an expense for $50 because we're debiting expense and then we're crediting the bank account. So anytime we credit an asset account, it decreases. Anytime we debit an expense account, it increases. So we're increasing supplies expense by $50 and we're decreasing the bank account. We're spending $50. We're crediting $50. Typically though, if you're actually doing bookkeeping, I'm just doing this for demonstration purposes so you can understand how debits and credits relate to each other. Typically, this transaction would occur in the bank feed. And so you would see $50 at Home Depot, $50 at Walmart. And so you would just record the expense that way. But this works for anything. Cash, if you pull $50 out at the ATM, or if you write a check for $50 and you spend it on supplies, this is what that would look like. Now, let's say, for example, that you purchase a vehicle. So let's see what kind of assets we have. So that's an expense. But now let's say you or your client purchases a vehicle. So we have to add a new vehicle. We have to add a new chart of account, and we'll see how quickly my QuickBooks works right now. So we added a truck, and the account type, we'll just call it a fixed asset, and the detail type, we'll say vehicle. Looks like we already have that in here, but if you had to create a new chart of account, that's how you would do it. You would create truck, fixed asset, vehicle. So let's just say, for example, you purchased or your client purchases a truck, And let's call it a $50,000 truck. So we're actually going to have 1 month before we purchase the truck, we're going to have a $5,000 deposit. So that $5,000 deposit goes towards the truck. So we are crediting the bank account for $5,000 and debiting the truck, the fixed asset account, for $5,000. And then 1 month later, we get the truck and we get a loan. We get a loan for the truck. So remember I said it was a $50,000 truck. So now we're going to get a loan for the truck. So now we have to come in here and we have to add new, and let's create a truck loan account. And so this is going to be with a bank or a credit union or any other loan company. It'll be a long-term liability, note payable, and this is a truck loan. So we're going to credit the truck loan for $45,000, and then we're going to debit the truck account for $45,000. So now when we look at our balance sheet, we're going to see the bank account decreased by $5,000 because of the down payment. The truck account increased by $50,000 because of the down payment plus the loan. And then the loan account is going to increase by $45,000. So remember, assets always equal liabilities plus equity. So in this example, assets, we have a negative $5,000 on the bank account and a $50,000 truck. So we have $50,000 minus $5,000. So we have $45,000 of assets and a truck loan for $45,000. So the assets equals the liabilities plus equity. So that's how you purchase a truck. Now, if you didn't get a loan, it would be even more simple. If you didn't get a loan, let's just say you just paid straight up $50,000. $50,000 came right out of the checking account and we got a truck. No loan, no, super simple. So $50,000, we debit the truck account, the asset account, and we credit the checking account. Now, let's say, for example, we use our credit card to buy supplies. So now, same concept. Instead of our checking account, we're going to use our credit card to purchase supplies. So we're still debiting supplies for $50,000, but instead, now we credit the credit card for $50. So debit supplies for $50, credit the credit card for $50. So this will create a $50 expense on the balance sheet, on the profit and loss, $50 expense. So this will decrease our net income by $50 and it'll increase our expense by $50. And it'll also increase our liability, which in this case, the liability is the credit card. And then whenever we pay off the credit card, it's super simple. We just take our bank account and we're just simply transferring money from the bank account to the credit card account. So we credit the bank account, credit checking for $50, and then debit the credit card for $50. So this is what a credit card payment would look like in a journal entry. We're transferring money from the bank account to the credit card account. Now let's talk about income. Let's say, for example, you just sold and you just got a new client. You just made some income. You just got some revenue. We'll call it $100 of revenue. Now you have two options. You can either recognize your income as an invoice, and that would be $100 of income. So typically in QuickBooks makes it easy to do bookkeeping without really understanding bookkeeping fundamentals, which is great, but it can also kind of be a problem if you don't actually know bookkeeping fundamentals. Then it could bite you in the butt in the future. So it can kind of encourage lazy bookkeepers. So really, if you have a $100 invoice, you're just going to click plus new in the top left-hand corner, and you're going to create a $100 invoice. But just so that you can understand how debits and credits work, in this example, we're going to credit income, or in this case, it's called services. So oftentimes income is called services or sales of product, whatever you want to call it, income. We're going to credit income for $100, and then we're going to debit accounts receivable for $100. Now, whenever you receive that payment, now you're going to do the opposite. So you don't touch the income. The income is still there, but now you're going to credit accounts receivable. And let's just talk about undeposited funds real quick. So now let's say your customer hands you a $100 check. So you want to close the invoice. So you close out the invoice, but the money isn't technically in your bank account. So it's still sitting in this limbo account called undeposited funds. So in this example, we credit accounts receivable to cancel out the invoice, to cancel out accounts receivable, and we debit $100 to undeposited funds. Now, this undeposited funds account should never hold money for more than a couple days. If it is holding money for more than a couple days, that means something is probably wrong. It's only a temporary holding account, because as soon as you go to the bank, now we undo what we just did. Undeposited funds. Now we're going to credit undeposited funds, and we're going to debit the checking account. So this would be the full cycle of creating the invoice, closing the invoice, receiving payment, undeposited funds. So just to recap, I'll show you what that looks like all in a row. This is not how you would typically create a journal entry, but just so you can see the flow of the journal entry. So we have services and accounts receivable, $100. And then we have undeposited funds for $100. And then we're closing out accounts receivable for $100. And then we have the checking account for $100. And we close out undeposited funds for $100. So this is how the journal entry works. So really, if you really wanted to skip everything in between, as you can see, these two cancel out these two. So really, if you wanted to, you could just skip all of this and you could just do $100 services, $100 bank account if you wanted to skip all the in-between steps. What else do we have? Hey, I haven't been checking the chat, but if anybody has any questions about specific journal entries that you want me to do, let me know. Let's talk about a loan payment. Let's talk about this truck loan. So this truck loan, so let's do the checking account first. So we had $1,000. Just keep it simple. $1,000 coming out of the checking account, and then it's all going towards the truck loan. So you might think $1,000 coming out, $1,000 going into the truck loan, but that's not the case. So this is what I'll do during the month. I'll just record this as $1,000 going to the truck loan, but then when it's time to reconcile the account, what actually happens is we have interest expense. So maybe there isn't interest paid. Okay, so let's create a new chart of account. So add new account name. Let's call it interest expense. Account type, it'll be an expense account. Detail type, we'll just call it interest paid. Interest expense, interest paid. So now we just created a new chart of account, interest expense. So in reality, what actually happens is this. $1,000 comes out of the checking account, but only $900 goes to the truck loan and $100 goes towards interest expense. This is really important because if you don't recognize this interest principal split, then at the end of the year, your net income will be overstated because you had not recognized the interest expense. And this information, you can only get this information from one of two places. Hopefully, ideally, you get monthly loan statements from the client. If you don't get the monthly loan statements, you could create an amortization schedule. It might not be 100% accurate, but if you create an amortization schedule, if you know the beginning balance and the interest rate and the length of the loan, you should be able to create an amortization schedule. And then you can basically have a spreadsheet of monthly loan statements by utilizing that amortization schedule. Okay, a couple more things. Let's see, what else do we have? Let's say let's say you're just getting started. So you have a $10,000 bank deposit into your bank account. Where did this money come from? It wasn't income. We're just getting started. We took our personal money and put it into our bank account. So instead of services, we definitely want to make sure that this is not income. This is, let's call it owner's equity. This is owner's investment. So let's create a new chart of account and let's call it owner's equity. And then the account type will be equity. And the detail type will be owner's equity. And so this is your own personal money. So we're crediting equity and we're debiting the bank account. So we're debiting the bank account and crediting equity. Remember, assets equals liabilities plus equity. So asset, checking, equity, owner's equity, 10,000 equals 10,000. What else do we have? And you'll just do the opposite. If you pay yourself, you would just credit the checking account and you would debit owner's equity. What else do we have? What else do we have? So let's say, for example, you go to Home Depot and you return something. So if you return something, maybe $150, it's a bank deposit, $150 coming back into the account, and we're just simply going to credit the expense account for $150. So this is going to increase your bank account and it's going to decrease your expense account, which oppositely increases your income. So we're going to increase asset, increase equity, because net income flows through equity on the balance sheet. So if we decrease expense, we're increasing income, which makes sense because we're increasing the bank account. So there's really four ways that your clients will receive money. It'll be income, it'll be a return like this, it'll be owner's equity, and the last option would be some sort of loan or line of credit. So if you have a line of credit and your client pulls from that line of credit, we'll call the account name line of credit. And sometimes I like to do LOC in parentheses. And the account type, this will be probably a current liability. And then line of credit will be the detail type. So in this example, let's say they have a line of credit and they just pulled $2,000. So $2,000, and this could happen anytime. If they have a line of credit, they can pull from their line of credit anytime. So in this example, we see a $2,000 deposit into the bank account, but importantly, you want to make sure you don't recognize that as income and you don't recognize that as owner's equity. Instead, it's a liability. It needs to be a credit to the line of credit account, to the LOC line of credit for $2,000 and a debit to the bank account. So we're increasing our asset, our bank account by $2,000, and we're increasing the bank account and decreasing the liability account, the line of credit. Okay, so that's pretty much it. That's kind of the majority of debits and credits. I think I hit most of them, and I'm going to go back to the chat now and see what questions some people might have. So hopefully a few people are on here watching, and we will see what questions there are. Okay. Hi, Zach. I hear you. Good morning from Pittsburgh. Nice to see you, Josh. Iris, awesome. Thanks. I can hear you and see you just fine. Perfect. KLC, a few months ago, you were at 85 bookkeeping clients, but now it's closer to 75. Is that a normal churn rate or higher than average? I always thought bookkeeping clients stuck around long term. So my clients on average stick around for about 2 years, but I lose about one client per month. So I don't know if that's normal. I don't know if that's abnormal, but yeah. In year 3 and 4, I was onboarding like 5 to 7 clients per month, and I was losing like 1.5 to 1 clients per month. So yeah, right now I'm losing about 1 client per month. And a lot of the clients leave for 2 reasons. Typically, either they go out of business or they have their current accountant, their current tax accountant just do their bookkeeping for them. So they probably have an accounting firm doing their taxes, and their accounting firm's like, hey, listen, I see how much you're paying your bookkeeper. We'll do it for less than that, typically. So people are like, yeah, sure, I'll just go with my tax accountant. Or businesses go out of business. KLC, also, are you turning away new bookkeeping clients to focus on Zip Capital? So I am still taking on new bookkeeping clients, but I have an independent contractor, and he does all of my bookkeeping for all of my new clients. So he handles about 5 of my new clients. And so I actually just sent out a bookkeeping quote this morning for somebody for $1,000. So I'm not actively trying to get clients, but I'm not turning clients away, if that makes sense. So any new client I get, I just pass them off to my subcontractor. Jessica, good morning. In one of your videos, you mentioned an app that scans PDFs of bank statements to import transactions, DocuClipper. Definitely recommend. It's really great. Can you touch a little on adjusting entries in general? Yeah, David. I mean, an adjusting journal entry isn't really that much different than a regular journal entry, other than the fact that you're just kind of adjusting an account to probably true it up to some sort of statement. So if you have a specific question, I'd be happy to demonstrate that. But yeah, adjusting journal entries, typically an adjusting journal entry will come from the tax accountant. The tax accountant will typically tell you to make an adjustment. What do you most like about bookkeeping, and what do you most like about private money lending? KLC, the thing I like the most about bookkeeping is that I get to do a puzzle. I love solving puzzles. I love solving problems. So to me, right now, think about a puzzle that's not done, and think about a big jumble of bank transactions that are not recorded or not categorized. So for us, we get to take all of those bank transactions and we get to record all the transactions, and we get to create a financial report that is a complete puzzle. And so to me, that's very satisfying. I really like organizing everybody's expenses, cleaning up their chart of accounts, and generating clean, accurate financial reports. So that's the most satisfying part. That's the thing I like the most about bookkeeping. So with that in mind, with that understanding, if you really want to be a bookkeeper, you have to like that. You have to like everything I just went over, debits and credits. You have to like that. It has to make sense, and you have to like it. You have to like data entry and organizing transactions, recording transactions, reconciling accounts, because that's what you're going to do the majority of the time. You really have to like that. If you don't like that, if you're just trying to make money, you're going to be miserable, because that's what I do 40, 50 hours a week, is I just record transactions. It's not, if you don't like it, you're going to be miserable. And then private money lending, I love the leverage. I love the leverage. I can make so much money doing private money lending and managing my investment fund, and I work very little, which is just incredible. So I had to work. So yes, it looks like I'm doing very little now, but keep in mind, it took me 5 years to get to this point where I was able to do this. So not everybody can just start an investment fund with no experience. Typically, you need experience. You need a network, you need marketing, you need knowledge, you need experience. But now that I have that, I am able to make so much more money with so much less work than I am with bookkeeping. For example, I can make 20% on my money, and I'm offering about 10%, give or take, to my investors. So I can make about 10% on the spread. So if I raise $1 million, I can make $100,000 just managing $1 million. And to manage $1 million as a real estate private money lender, I would only need to fund 10 real estate transactions per year. And each real estate transaction, let's say worst case scenario, takes 5 hours. It probably takes less than that, but let's just say it takes 5 hours. So if you're doing the math, I can make $100,000 and I can work, what is that? 10 loans, 50 hours in 1 year, and I can make $100,000. It's insane. But I'm managing an investment fund. So a lot of the richest people in the world are in the finance and investment fund managers. I'm not saying I'm going to be one of the richest people in the world, but it's a very lucrative business because you have so much leverage. If you can leverage other people's money, you can make a ton of money. But it's a very serious job. I take underwriting very seriously, and it's all about risk mitigation, and it's all about trust, transparency, and having the experience to be able to manage other people's money. So it's a very serious job, very serious business, but there's so much leverage once you figure out how to do it. Let's see, Josh, I found someone potentially interested on Facebook. Can you walk me through how I should navigate that first call? Yes, Josh, ask a ton of questions in the beginning. It's really simple. As soon as you get on the phone, hey, Josh, hey, this is Zach Pasquarello with Harrisburg Bookkeeping. How's it going? Great, great. Is now still a good time to talk? Okay, awesome. So why don't you just tell me a little bit about your business? Tell me what you have going on. And then, Josh, your client is just going to talk and talk and talk. They're going to tell you all their problems. They're going to tell you everything they have going on. There's a couple questions that you can ask. You can ask things like, how many bank accounts do you have? How many employees do you have? Who's running your payroll? Who was doing your bookkeeping before? Why'd you fire them? Or why did they leave? Or why are you looking for a new bookkeeper? Are you currently using QuickBooks Online? Oh, you are? Okay, great. Is your bookkeeping up to date? Is 2024 all done? You just need 2025. Okay, you need 2024 is all good, but you need 2025, and you have QuickBooks Online, you have 2 bank accounts, and you've never had a bookkeeper before. Your spouse was just doing your bookkeeping before for you. Okay, great. So here's what we can do. Now that I have all that information, I can give you a quote today. All I need, I like to move things along. I like to proceed. I like to we're all here to get business done. So let's just cut to the chase. I can give you a quote, and that's probably why you want to talk. I can get you a quote. If you're sitting in front of a computer, you can invite me to your QuickBooks right now. If you're not, let me get your email address. I'll send you an email. All you have to do is send me your 3 most recent bank statements and credit card statements. Yeah, that's pretty much it. Let's see. James, morning, Zach. Not debit and credit related, but how did you pitch yourself to new clients that were looking at cheaper bookkeepers? I'm in the car rental industry and everyone is really cheap. James, I'm just straight up with clients. I am not the cheapest option. I'm never going to be. I'm not trying to be the cheapest option. I am the best option. I'm really good and I'm really fast. So I actually I'll tell potential clients on the phone, I specialize in working with people who hired the cheapest bookkeeper in the past, and then they had a bad experience and they come to me because I'm not the cheapest, but that means that I deliver exceptional customer service and I'm a bookkeeping expert and I'm a QuickBooks Online expert. So I know everything there is to know about QuickBooks Online and I know how to do your bookkeeping. I can solve all your problems for you and I work really efficiently and really quickly. So I'm not the cheapest. I don't pretend to be. I don't try to be. I don't advertise as the cheapest, but instead I advertise as high quality customer service. I'm in people's books weekly. I reconcile accounts monthly, and I send financial reports in the first 10 business days as long as all my questions are answered. Brian, good morning, Zach. I've been posting to social media for 25 days now, and I'm noticing a lot of businesses are reaching out to me for a partner relationships. How do you communicate with them? Worth looking into. I don't like to mess around with working together, collaborations, synergies, partnerships. I don't mess around. I try to keep my offer very clear. And this is happening a lot with Zip Capital. So there's a lot of noise that I have to filter out. Right now, I'm very quick to say no. I'm very quick to say no. Just yesterday, somebody reached out to me. They sent me an email about a loan that needed to be funded. And I saw the email. I thought about it for a second. I was like, maybe I could take a look at it. But I just thought, you know what? No. I just sent them an email right away. I said, hey, Mike, thanks for sending this over. I have so many loans to fund right now. I won't be able to take a look at this for at least a few months. So maybe let's reconnect in 2026. And then he said, hey, what's your biggest problem right now? What's the holdup? What's holding you back? I said, right now, I just don't have enough capital. I don't have enough funds in Zip Capital to fund these real estate loans. And he replied back in a couple hours. He said, hey, Zach, I know somebody who might be able to help you raise capital. Can you answer a few questions? And I thought, oh, wow, this is a great opportunity. Maybe somebody could help me raise capital. But I was like, no, this is just another distraction. I'm not doing it. So I replied back. I said, hey, Mike, appreciate it, but I'm just going to focus on what I'm doing right now. And I'm just going to raise my own capital. Maybe we can touch base again in 2026. So don't waste your time on partnerships or synergies or relationships. Not relationships. Relationships are good, but partnerships and people trying to work together, I'm never a fan of it because usually people are trying to get something out of you. Very rarely are they like, hey, I've got so many leads I want to offer you. Like, here's 20 bookkeeping clients. You're welcome. Have a great day. Like, that's not going to happen. Like, they're trying to get something out of you. So I'm not interested. I'm very quick to turn down partnerships and synergies and collaborations. I'm just not interested. I know what I want right now. Speaking as you guys, right now, I want bookkeeping clients. If you are a business owner looking for bookkeeping, looking for somebody to manage your QuickBooks, let's chat. If not, respectfully, I don't have time for it because I need to connect with other business owners who need help with their QuickBooks. That's my number one priority. Anything that doesn't get me closer to landing clients is, quite frankly, respectfully, a waste of my time right now. Let's see, Josh, when you create an interest expense account, how often do you create sub accounts to track things individually? Very rarely. I hate sub accounts. I only do it if my client specifically requests that I do it. I'm really not a fan. Really not a fan of sub accounts. MN, a prospect is using a personal credit card for business for quoting purposes. I asked to mark biz transactions. Is this okay? What about later as a client required to get a business credit card? Yes, I hate when clients mix business and personal transactions. If that happens, I tell them, hey, you need to separate your business and personal expenses. If you don't do that, I'm going to send you an entire list of transactions and I'm going to say, is this business or is this personal? And keep in mind, you don't need to tell your client this, but you're quoting them based on their total number of transactions. So if they continue to mix their business and personal transactions, that's more work for you, which means that's more money for them. I charge $3 per transaction. So if they have even 20 or 30 personal transactions per month that are flowing through their QuickBooks that I need to account for, that's an extra $60, $90, $100 per month that they're wasting on my bookkeeping, and they're wasting my time. They're wasting their money just because they refuse to separate their business and personal transactions. So I hate it. I really don't like it. I really try to encourage my clients to stop mixing business and personal transactions. If they don't do it, I generally tell them, first of all, I tell them you need to stop doing this. Like starting from today on, you need to stop doing this. And I'm going to assume that everything that flows through your business credit card is a business transaction unless you specifically tell me otherwise. Brian, journal entry question. You mentioned if you had to clean up that had a huge unknown financial gap, you would add a journal entry for that. What would that look like? So I'm not going to pull up QuickBooks again, but that would be really simple. So you would just debit the checking account and you would credit the opening balance equity account, or you would credit owner's equity for whatever the difference is. So if it's a $10,000 difference, you'll debit the bank account for $10,000 and credit owner's equity for $10,000, or retained earnings for $10,000. Or if the checking account is too high, then you'll credit the checking account and you'll debit owner's equity. So whichever way you need to go, debit or credit, and then debit or credit the corresponding equity account. But you figure that out by looking at the bank statement. So you look at the bank statement, 12/31/2024, you figure out what the ending balance is, you look at QuickBooks, and you try to reconcile, and whatever that difference is, if you're not doing the 2024 bookkeeping, you just do that one single journal entry to clean it up. All right. Alan Pop. Morning, Zach. You're very inspirational. I appreciate you. Hey, your questions are also inspirational. Your questions are motivating for me. I love answering your questions. And believe it or not, everybody's contributions to this live chat is inspirational for everybody else, because I'm sure some of you are asking questions that other people didn't even think about. Carol, can you talk about the Zip Capital? Can we start the business like you, or you can teach us? So Carol, I'm not going to teach people how to start an investment fund right now. It's just private money lending. So what I would recommend you do is first get $25,000 of cash, and then work with real estate investors and figure out how you can lend to real estate investors. Right now, I'm charging 12% annual interest plus a 3% origination fee on my private money lending. So, and it's only 6 months. So I'm making 18% annual return on my loans, which is amazing. That's a lot better than what you would typically get from the stock market, unless there's a crazy good year. But 18% annual fixed returns is amazing. So that's how I'm able to offer. Zip Capital offers 8 to 12% to investors. So if you want to learn more about investing into my investment fund, there is a link in the description of this video. You can register on my website, and you could potentially earn 8 to 12% fixed returns by investing in Zip Capital. The Mental Chewing Gum podcast, definitely need a tutorial on how to do the actual work. Some of this stuff is still so confusing. Yep, I agree. It is confusing, but you can figure it out. It's just going to take experience. It's just going to take experience. Let's see, the Marto way. I would like to see in live the process of cleaning the books for past period, when for the past years the books were not run properly and there is a lot of mess. Marta, that is a 10-hour long process. So yeah, there's a lot that goes into a cleanup project. I do have a video, like a 30-minute video that I talk really in depth on how to do that. It's also a part of my course. So I do have a course that does have a cleanup project section in the course. The course teaches you everything you need to know from A to Z: bookkeeping fundamentals, QuickBooks Online, marketing, sales, cleanup projects, customer service, onboarding clients. It has a ton of digital downloads, and that is also linked in the description of this video. If you want to take my course, definitely recommend check it out. It's linked down below. Living in Merced, California. Thanks for doing the live videos. Do you have prospects on an email drip? No, I do not. Not for Harrisburg Bookkeeping, but I do have prospects on an email drip for Zip Capital. So I send interested investors an email every month with updates on Zip Capital. Alexis Luis, good morning. I have a client who used their personal credit card to purchase things at the beginning of their business until they got one in their business name. What is the easiest method to account for this? Debit the expense, credit owner's equity. Just treat it like they're using their own personal money to purchase expenses in the business account. So do a journal entry, debit the expense, credit owner's equity. DFOS, hey Zach, if a new client is moving into QuickBooks at the beginning of the year, what would the journal entry look like to bring over the beginning balances? Debit the bank account, credit owner's equity. Credit the credit card account, debit owner's equity. Pretty simple. So whatever bank accounts, loan accounts, asset accounts, whatever vehicles and buildings and bank accounts and savings accounts and loans and lines of credit and credit cards, figure out what the balance in those accounts was at the end of the year, and then debit all the asset accounts and credit all the liability accounts, and then just do a whatever is left over, do a journal entry to owner's equity or retained earnings for whatever is left over. KLC, losing 10 clients in 4 months seems like a lot though. Is there some seasonality to when clients leave or want to onboard? I imagine summer is slow and tax season is busy. Yeah, I don't really know. Clients seem to leave after tax season. Yeah, I would probably say like the first 4 months of the year, January, February, March, April, are super busy for other bookkeepers and other tax accountants. So people don't really leave them in the first 4 months of the year. So I would probably say people leave right after spring tax season and right after fall tax season. So probably October, November, people leave, and then May, June, July, people leave. Let's see. Do you offer referral fees? Maybe I do. It never really happened. Honestly, I got all my clients from my own. I got all my clients on my own without really offering referral fees. So no, I don't I would do it, but I don't really do it. And if I did do it, it would just be 1 month of services. So if somebody's paying me $500 a month to do their bookkeeping and it comes from a referral, I might pay somebody $500. Turmoil. Why would clients come to you just for bookkeeping when they can go to a firm and get everything in one package? Because an accounting firm is not good at bookkeeping. Pretty simple. I just specialize in bookkeeping. Accounting firms, they really like tax returns and audits. That's where they make the majority of their money, taxes and audits. And so bookkeeping is kind of an afterthought. They just have one person or maybe a couple people in their office who just do the bookkeeping, but it's usually an afterthought. And so they might do their bookkeeping once a month, whereas me, I do your bookkeeping once a week. So it's a much more specialized white glove personal service versus an accounting firm might do it at the end of the month, end of the quarter. It's much better to have an individual bookkeeper doing your bookkeeping for you. Josh, do you tell people you only work with QBO up front? How often does that disqualify a potential client? Most people nowadays are using QuickBooks Online. 5 years ago, a little bit different. A few more people were using desktop, but now it seems like the majority of people are using QuickBooks Online. So yeah, I'll get about halfway through the sales pitch and after they tell me about their business, I'll say, are you currently using QuickBooks Online? They'll say yes. I'll say great. They'll say no. I say, okay, are you willing to switch? And they say yes. I say great. They say no. I say, okay, unfortunately, I only work with QuickBooks Online. So if you don't want to switch, that's fine, but we can't work together. Iris, do I have to do journal entries for PayPal accounts? I've noticed transfers to PayPal listed as a deposit and the bank account shows a payment to the purchase, the same as PayPal. I hope this makes sense. If your client is tracking the PayPal account as a separate bank account, then you could just take the transfer from the bank account, record it as a PayPal transfer, and then when you go to reconcile, it'll be an uncleared transaction on the PayPal bank account, but you just select the transfers from the bank account to the PayPal account, and then you can treat the payments coming directly out of the PayPal account to the vendors as payments. So you've got transfers from bank to PayPal, and then you've got payments from PayPal to vendor. So you want to make sure if you do have the PayPal account in QuickBooks as a separate bank account, you do want to make sure you get that monthly statement so you can reconcile the PayPal account every single month. Tori, what happens when a company does use a business account for personal expenses? What tax implications are there? What happens when a company does use a business account for personal? So it's just crediting the bank account and debiting owner's pay. So treat it just like just like instead of transferring $1,000 from my business account to my personal account, instead of doing that, I'm just taking my business credit card and purchasing something personal. So it's just a debit to owner's pay, owner's draw, and a credit to the bank account or a credit to the credit card account. David, how would I track personal expenses spent with the business account money? This seems to be a very common question. It does happen a lot. So personal expenses, it's just owner's pay, owner's draw, owner's equity. It's an equity account. So you'll credit the bank account and debit owner's pay, or debit owner's pay and credit the credit card. Why do we have to park the cash for a while to the undeposited funds? If in the end we eventually transfer them to cash, is it a way that the business have extra cash on hand? No, it's just a holding account because technically it hasn't been deposited yet. So you don't have to do it. You really don't have to do it. You can just close out the invoice and just debit the checking account right away. You don't have to debit undeposited funds. It's just an in-between step. If you use QuickBooks to process your payments, QuickBooks will automatically debit undeposited funds. So just keep that in mind. If you're using QuickBooks as a payment processor, you always want to check undeposited funds on a regular basis to make sure that income is not being duplicated. East Side Books Online, Mark Aquino. Why do we have to? Oh, you already asked that. Sorry. Erica, how did you determine the moment you felt financially comfortable to transition to your bookkeeping business full time? I got a $9,000 cleanup project in March of 2021, 5 months after I started my bookkeeping business. I had 3 months of living expenses saved up, and I made about $5,000 in bookkeeping the previous month. And I just got a $9,000 bookkeeping cleanup project. So I knew that I was probably covered for the next 3 to 6 months. So even if my business totally failed, I didn't get any new clients, then I'd be good for 6 months. So I waited very simply 3 months of living expenses saved up and $5,000 to $10,000 of business income. Alan, yes, I want to know that also. Okay, Alan, hopefully I answered that question about undeposited funds. David, if my client had spent business expenses from their personal account, would I just journal entry those expenses into the business books and count it as paid in capital? Exactly. Yes. Owner's equity, owner's distributions. Would this mess with my bank recs? Nope. It's still because you still need it as a bank transaction. So if my client has spent business expenses, no. So if they're using their personal account for business expenses, then it's the same concept. It's just the opposite. Instead of using their business account for personal expenses, they're using their personal account for business expenses. So it's just the opposite. So you're going to debit expense, credit owner's equity, the exact opposite of what you would have done the other way around. Hollywood Poe, hey Zach, what do you do when the undeposited funds is really high, 100K for a new client? Talk to the client, let them know what's going on, and then probably do a journal entry from the previous year just to clean it up. And that's tough because their net income is probably overstated really badly. So talk to the client, let them know, hey, this is really bad. Your undeposited funds account is way out of whack. I can clear it out. I can just do a journal entry to credit undeposited funds and debit, I don't know, retained earnings or owner's equity, but there's a good chance that your income might be overstated for previous years. So if you want, so it's really tough because technically you should go back and try to find all the bank deposits that match the undeposited funds. But if you're not able to do that, then unfortunately the only option moving forward is just to do a single journal entry to clean that up and reconcile that. But it's not going to be accurate. So their income could potentially be overstated. So the most accurate, best way to do that is to go line by line, individual transaction at a time. Hi, Zach. Irina. Hi, Zach. Any tips for meeting with CPAs for potential referral discussion? What questions are good to ask a CPA? Thank you. Ask them if they're doing bookkeeping. Ask them if they need help during tax season. Ask them if they're overwhelmed by trying to do bookkeeping. Ask them if they want me to help. Ask them how we could work together. Ask them if do you want me to refer tax clients to you? Are you still taking on new tax clients? Can I refer my clients over to you? Ask them how can I get paid? Can I work for you hourly, or can we do like a revenue split? Yeah, CPAs are kind of tough. There's two different types of CPAs. There are CPAs who have been in business for 30 years and are overwhelmed, but are just barely getting by and more traditional and not taking on new clients. And then there's newer CPAs who have only been around for 2 to 5 years, who are taking on new clients and who aren't super overwhelmed, more tech savvy. But just be careful because those newer CPAs, they might eventually start doing bookkeeping in the future. So the person who's been around for 30 years and not doing bookkeeping, chances are they're not going to start doing bookkeeping in a couple of years. But the person who is new and not doing bookkeeping right now, they might start doing bookkeeping in the future. So just be careful. Sunbay Bookkeeping, when working with medical professionals, since they can't give patient information, how or what would you collect from them to show insurance payments and copays? They probably have a whole third-party system software managing their accounts receivable. So I would probably not need that information and probably just record the bank deposits as income and then maybe do a journal entry at the end of the month to recognize accounts receivable, just to put accounts receivable on the books. But yeah, I probably wouldn't. I don't know. To be honest, I've never done bookkeeping for a medical professional, so I don't really know the answer to that. I was just kind of guessing. So sorry about that. Iris, thanks. You're welcome. Charles, how about clients with Shopify or Square sales where the net deposits are landing in the income account? What is your process to reconcile Shopify or Square payouts to QBO? So I'm recording the transfer as income. And then I'm looking at the Square fees or Stripe fees at the end of the month. And then I'm doing a journal entry to debit Stripe fee expense and credit income for whatever's left over, because the difference in the payout and the actual income is only just Stripe fees. It's just the fees, the processing fees. So if you know what the fees are every month, then you can figure out what the extra income was. And so you're just going to debit Stripe fees and credit income for whatever their monthly fees are. Is there a ceiling to bookkeeping where you've seen everything and learn exactly what's going on and can learn by observation? Is there a ceiling to bookkeeping? So the thing about bookkeeping fundamentals, yes, but QuickBooks Online, no, because QuickBooks is constantly changing. So you have to always be learning how to keep up with QuickBooks Online. And also marketing is constant. We're not just bookkeepers. Bookkeeping fundamentals, if you just gave me a pen and paper, T-charts and a general ledger and chart of accounts, that's been the same for hundreds of years. But if you look at QuickBooks Online, that's constantly changing. And then also sales and marketing tactics and techniques and chat GPT and artificial intelligence and keeping up with robots, like that is constantly changing. So straight up fundamental bookkeeping is not changing, but that's like 10% of what we do. 90% of what we do is sales and marketing, AI, chat GPT, QuickBooks Online, Squarespace, Google My Business, social media, SEO. Like there's so much more that goes into running the bookkeeping business that definitely changes on a daily basis. How do you handle intercompany accounts between two businesses one person owns? You've got two options. You can do like a due to, due from account. So if I'm transferring money from one account to another account, it'll be an equity account, due to, due from other company. And so those equity accounts should match on the balance sheet. That's the most accurate, but the most complicated way to do it, because transfers need to match perfectly. The other way to do it is just to treat it as owner's equity. If I have two companies and I transfer money from one company to another, it's basically just an owner's equity transaction. So owner's equity on one side, owner's equity on the other side. You should teach college classes. I mean it. Alan Pop, appreciate that. That really means a lot to me. Thank you so much. Junior Wing King, good to see you. Do cash basis even have undeposited funds? Most small businesses are cash basis, right? Yeah, you're still going to have undeposited funds even if you're cash basis. It's just a temporary holding account. Anybody who uses QuickBooks Online to process their payments will have undeposited funds. Do you use QuickBooks Payments or do you use another payment processor? Yes, I use QuickBooks Payments, but I also, majority of my processing for my monthly clients is all done through my bank. So I do ACH origination through my bank. So I get people's bank information. I process their payment straight through my bank account. That's how I manage interest payments in Zip Capital. Like I pull the payment every month, and that's how I manage my monthly bookkeeping clients. Brittany Kong, if a client is starting fresh in QBO, previously using Quicken and don't want catch up done in QBO, how do you determine the opening balance for a credit card account on the first of a month? So what you're going to need to do, so credit card statements are tough because they come out halfway through the month. So what you want to do is take the December credit card statement, which will probably be December 15th, and do an entry for that. So you're going to debit owner's equity or retained earnings and credit the credit card account for whatever the ending balance on December 15th was. And then you just want to simply record all the December into January transactions. So December 15th, 2024 to January 15th, 2025, just record all those transactions, and then you should be able to reconcile the account on January 15th. So you might have to manually record some of the December 2024 transactions, but it's the easiest way just to make sure everything's right. How do you decide, David Gustave, how do you decide if an item is an asset to depreciate or an office expense? Example, typically $2,500 is a good threshold. So anything under $2,500, you can probably just expense. Anything more than that, you might want to throw on the balance sheet. Junior Wing King, between family and business, where do you find time to exercise and how tall do you have to be to squat 500 pounds? LOL. So I make a lot of sacrifices. I try to go to bed early, always going to bed before 10 p.m. typically, sometimes 9:30. So I don't stay up late watching Netflix. I try to go to bed early. I wake up early, 5 a.m. every single morning, try to at least, and get work done. I make sacrifices on the weekend. So I'll wake up early on Saturday. Nobody wants to do that, but I'll wake up early and get some work done on Saturday. That way I can spend time with the family. And then I go to the gym at 12 p.m. every day. So I work from 5 a.m. to 5 p.m. and I go to the gym for about an hour in the middle of my day. And then, of course, I eat breakfast and I eat lunch in between those two times. So 5 a.m. to 5 p.m. Monday through Friday, and then probably 2 or 3 hours on Saturday, and sometimes an hour or two on Sunday. And how tall do you have to be to squat five? It's actually, I think, the taller you are, the harder it is to squat 500 pounds. So it's actually beneficial to be shorter because you have a smaller range of motion. But yeah, I am 6'1", so I'm not short. But yeah, I just squatted 500 pounds a couple weeks ago. So that's been my 3-year goal. So consistency doesn't just show up in running the business. Consistency shows up in all facets of life. It shows up in raising kids, diet and exercise, fitness goals. Yeah. Erica Hoaxy, I don't like using undeposited funds. Neither do I, but QBO forces you to, unfortunately. If you're using QuickBooks Online as a payment processor, it forces you. Junior Wing King, if you work remotely and you don't know how much cash is in your client's pocket without them telling you, how do you know how much undeposited funds to record? So undeposited funds. So if a client, it's all just through QuickBooks. So whenever one of their customers pays an invoice, QuickBooks automatically moves something into undeposited funds. I don't use undeposited funds. I only am forced to use it when there's a QuickBooks transaction, when they're using QuickBooks as a payment processor. So I don't manage people's accounts receivable unless they specifically tell me to. So if clients are creating invoices and they're marking them as paid, it's up to them to tell me, hey, I just received this invoice. I just received this $3,000 check for this invoice. The client has to tell me the checks they receive and the payments that they receive. Jeremy, sorry, I can't pronounce your first name. If a client has 2 branches and inventory items are being transferred from one branch to another, how do I treat that on QuickBooks? If a client has 2 branches, I'm not sure what you mean by branch, but probably, yeah, unfortunately, I don't know what you mean by branch. I'm so sorry. Marion McNaughton, do you need a special account to do ACH origination? Yes, you'll have to set up treasury management, cash management with your business bank account. My bank said it was a special account with a minimum balance of 25K. My bank doesn't have that. So unfortunately, I don't know what your bank is talking about, but yeah, it's cash management, treasury management. It does cost extra. You have to apply. You have to apply to get the treasury management or to get the ACH origination. Like I had to submit tax returns and get approval. Yeah. By the way, I have a weight goal, lose 30 pounds by the end of December. Let's go, Erica. You can do it. 30 pounds, that's a lot, but I'm sure you'll feel amazing after you do that. Junior Wing King. Oh, so when a customer they have set up in QuickBooks pays an invoice, the money doesn't go directly into their bank. I'm new to this. Sorry, man. It's all good. Yeah. So whenever a customer pays an invoice, so if you pay an invoice today, it gets put into undeposited funds in my QuickBooks. And then tomorrow it shows up in the bank account on the bank feed. And then I transfer the money from undeposited funds into the bank account through the bank feed. Irina, the client had started QBO and connected personal card they use for business and categorized transactions in QBO, but my understanding personal cards should not be connected. What do I need to do now? Thank you. So if they're using their personal card and if it's all business transactions, that's fine. You can still keep it in there as long as all the transactions are business transactions. That's fine. You just want to make sure that the transactions aren't personal. If they're personal transactions, you don't want to include them in the profit and loss. All right, that's it, everybody. I got to run. I got 2 new investors in Zip Capital today, so I'm super pumped. I've got $1.5 million of other people's money in Zip Capital, and I've got a phone call. I've got a meeting in 6 minutes with somebody else who wants to invest $300,000 into Zip Capital. So I'm super excited about that. If you want to learn more about my investment fund or my course or anything else, I don't go live on Monday because I host a weekly meeting at 3 p.m., a private group meeting every Monday at 3 p.m. So if you want to join that, there's a link in the description. Check out my website, ton of digital downloads for you. I've got a free Facebook group. I've got a course. I've got an investment fund. Check it all out. I'll see you all tomorrow. Every Tuesday, Wednesday, Thursday, Friday at 10 a.m. going live on YouTube. I'll see you all tomorrow.